You're taking the history of the cash flows and you're almost like projecting this line out into the future. That makes a lot of sense instead of kind of like speculating on where something is going. And then of course, after a while, you realize that, value investing has gotten, dramatically outpaced by growth and momentum. And the reason is because, you're changing the denominator constantly. So realizing that and then kind of saying, what's the solution to this problem, right? Like the unit of measurement is changing all the time. So, how can you fix that problem? And then, of course, you come across Bitcoin, the whole fixed supply thing, halving every 4 years. And so, realizing this is the solution to this big problem. And I still think when we get to the other side of, hyper Bitcoinization, I think the value investing will come back to the forefront, because then you'll just be valuing the cash flows, how much Bitcoin is being generated, kicked off by the business. So after we get to the other side of this thing, we'll probably have to pull back out of security analysis and go back through that again.
Today, I'm sitting with rising star and Bitcoin thought leader and Bitcoin analyst, William Clemente III. Will has quickly become a very popular presence and voice within the Bitcoin community, forecasting Bitcoin's next price moves by analyzing the supply and demand of Bitcoin's on-chain analytics. Will, welcome to the show.
Hey Jay, thanks for having me. We've been kind of going back and forth on Twitter for a couple of weeks now, and excited to be on, man. I'm in the footsteps of some really cool people. I remember I watched the Scaramucci interview and then the Preston Fish interview as well, so happy to be on.
Absolutely. I'm happy to have you on. Like I said, you're a rising star. We're going to get to that in a minute. But before we start the show, the first question I ask people are, who are your top 3 rappers of all time?
See, this is going to be a little bit different of an answer than probably a lot of the people you've had on, because I'm a little younger. But
yeah, exactly.
I got to go with Future. He's one of them. Kendrick Lamar and Jay Gould, because he's from North Carolina.
All right, cool.
Yeah.
That's right. You are from North Carolina, which probably connects some dots here, actually. Before I go to the next question and we start diving in, I had somebody on the show and he talks about, I don't know if you remember, T-Mobile had the top 5. You had your 5 people on your home screen. Who are your top 5 people in your life that you talk to on a weekly basis these days? And they say that you are the average of the 5 people you surround yourself with the most, which is why I find that an interesting question.
Yeah. So is this Bitcoin wise or just like life in general?
In life, right? Like, who are you spending the most time on phones or in person with that if you think about this, like, who are the 5 people you're spending the most time with? Because it's kind of probably influencing the way you think, or you might be influencing them.
Yeah, sure. So I guess first of all, my girlfriend, but second of all, Pomp. Pomp has been a really big influence on me over the last couple months. We've obviously been doing, the on-chain, the podcast, and the newsletter, but, outside of that, he's just a real, genuine dude. And, if I need something, I can just hit him up, or, he'll just check on me. How's it going? How's your week going? That kind of thing. So Pomp's up there. And then I guess my parents as well. I've been very blessed to have really good parents. So, especially like being quarantined in the house over the last year, we've gotten a lot closer. I think we drove each other crazy a little bit for the first month or two, but now everything's way better than it was when we went into the whole quarantine thing. And then lastly, I would say also my girlfriend's dad. We're actually really close. He's kind of like, I'm very close with my dad, but he's like another second, male figure in my life. So I look up to him as well.
It's funny. Do you know who Robert Kiyosaki is? Rich Dad, Poor Dad?
Yeah. Yeah.
So it's kind of like that a little bit. You have 2 influences for father-like figures. That's interesting.
Yeah.
Why don't you tell us about your parents? What do your parents do for a living? Where did you grow up? I think you mentioned that. And let's kind of learn about your upbringing a little bit.
Yeah, sure. So I grew up about an hour and a half south of Raleigh in a very small town called Fuquay Varina. And so my parents, like my whole family is from New York, but they moved down shortly before I was born. But my dad, he worked for IBM, and then the section that he worked in got bought out by Lenovo. So he works for Lenovo, and then my mom, she stayed at home. So I have 2 other sisters. After my older sister was born, she decided that she was going to stay at home. So, very close to my mom, obviously, for that reason. Never went to daycare or any of that. Which, to be honest, I kind of attribute that to like me being more of an introvert, because like I think I didn't get a whole lot of socialization when I was really little, so I always was just like very kept to myself. But yeah, very very close to my mom because she would stay at home. And yeah, my dad, I remember when I was way younger, when I was like, I don't know, maybe like 5, he was doing an overnight job, trying to get his MBA while he was doing like this like overnight security job, and then he was working for IBM during the day. So a lot of my work ethic comes from my dad. A guy is working all day long, and I look up to him a lot in that sense. And my mom as well. She was a hustler, but until she started staying at home. Now she doesn't work as much, but she's still like
Dude,
always
I
on
don't
the
know
go.
about that. Mom's listening, I'm sure. She's hustling, working at home, brother. I got 4 kids. Let me tell you, it's a lot of work raising the kids.
Yeah, my sister, she's a teenager now, so she's been giving my mom a handful. So I guess that's a full-time job in itself. And then she also takes care of her sister's mentally retarded, so she takes care of her sister pretty much. Half of the day, every day she drives over there and takes care of her. So yeah, I think you're right. My mom is busy too.
Working a lot, brother.
Yeah.
Did you play sports when you were in high school, when you were younger?
Yeah, so I kind of played everything. I played soccer, baseball, lacrosse. I remember I even did golf for like a week or 2, but I didn't like how slow it was. And then basketball was kind of my big sport that I did towards the end.
Okay.
I was on the middle school basketball team. I was point guard. So I was kind of like, I couldn't shoot for shit, but I was more like, the facilitator. I would kind of, like set people open and, throw some dimes. I would usually have more assists than I had points in the game, but I was more of like a pass first point guard. And then played my freshman year of high school, and then I kind of just cut it off from there when I realized that there were people a lot more athletic than me. And
irrespective, though, you did play sports. You're competitive, and you understood the value of sports, I guess, the competitiveness and the teamwork, right?
Yeah, for sure. Especially, with basketball being the point guard, you kind of have to know your players really well and, understand everybody's, attributes, where they're best, where their good spaces are on the floor, where they shoot best from, those kinds of things. Like after you build chemistry for a while, so-and-so's trailing you on, when you're coming down on fast break, and, where he's going to be running down the court. So like those kinds of things. I think basketball really taught me a lot through that. And then obviously the whole competitive nature side of things. AAU basketball, I think, was like the best competition I ever had, because, it's people from all over the place. Everyone's going at it. There's scouts there. That environment, I love that kind of competitive environment. And I think in a weird way, Twitter is kind of similar with this, kind of taking the conversation another route, but, with the information that everybody puts out on Twitter, where it's like, there's other people that are kind of doing something similar to me, but it's like, if I'm slacking off for the day and haven't really been like putting out any work, and then I see, some guy comes out with like this really good thread and it's getting a bunch of attention, I'm like, oh shit, I need to get on it, so I think it's kind of like, kind of iron sharpens iron kind of thing, which I think kind of originated like my love for that kind of environment through sports, but I think that generates or translates over to Twitter as well a little bit.
So, Will, you're in college still, right? You're 19 years old. You're still in college?
Yeah, I just finished my sophomore year.
So where are you going?
Yeah, I go to East Carolina University, which is like an hour and a half east of Raleigh. To be honest, it's kind of like a big party school. That's what a lot of people know ECU as. But their business schools, I think it's gotten a lot better. They're kind of like trying to pivot over to more like being known for academics and stuff like that. But I was only there for my first year, and last year I was home the whole year. So I think that's got a big reason to do with why I've been getting involved with all this Bitcoin stuff, because I've had so much more time on my hands and not as much craziness around.
What are you majoring in? What are you going to major in?
Finance.
Finance, yeah.
Yeah, originally I was entrepreneurship, and then I actually started a small business in my dorm. We were like collecting plastic, because we were doing it for this school competition, this entrepreneurship competition, and the theme was like sustainability. So we were gathering plastic from the whole dorm building. Every 2-3 days we would go and empty out all the recycling bins from the whole dorm. And then we would sell the plastic. And so that was kind of like our little small business, my first like kind of like hands-on experience with anything business. But then I realized like the capital to start like a real recycling like manufacturing center was going to be way more than I was going to have access to. So I realized that it is time to cut that quotes, especially when we got sent home from school. So Yeah, that was kind of my first taste of like the whole entrepreneurship thing. Kind of decided that it wasn't really for me, especially once I kind of got a exposure to finance. I remember it was at the end of the year before, so the end of 2019. I came home from my first semester. I was like dead broke. I had no money. Like I had to ask my parents for money for beers, like all this. It was just humiliating having like no money in my account at all. And I remember like I went to McDonald's and my card got declined, and I was like, damn, like I have to get a job when I come back, because like some of my friends always they would get allowances from their parents, but I just it like pained me to ask, like just from like it was like a pride thing, I guess, which is kind of selfish, but um yeah, I just would hate to have to ask my parents, be like, hey, can you send me money? So I was like, I have to get a job. But the only job I could get on a fly after my first semester was this overnight stocking job, which was at Michael's, like the arts and crafts store.
Yeah, my wife goes there all the time.
And so I would go in at like midnight, 2 a.m. and then my whole Christmas break I was just working almost every day doing that. And for the first couple days, because when you're in here, there's only a couple people in the store and they have no music on, so it's like everybody kind of has their own section, and you're like about to fall asleep, so you have to have headphones or else you're not gonna make it, unless you're like some like crazy person who just like likes dead silence for 12 hours at a time. And so originally I would just listen to music, and then I was like, I'm just pumping this garbage into my brain like on repeat, because I'm one of those people where like I have like a very small amount of songs and like I listen to the same songs over and over. So I was just listening to the same rap songs about like just complete like nonsense in my head the whole time. And I was like, I need to at least do something productive. Like, this is pretty much just like brain dead 12 hours a day, doing work that's just like you're not even thinking about it, just opening boxes and putting the stuff away where it tells me to. And so I started listening to Preston Pish's podcast and Stig Broderson's the We Study Billionaires. I listened to every single episode, and I still have listened to every single episode of their whole podcast. I was just back to back to back the whole shift. And I really thought the whole, Warren Buffett style, value investing, I thought that was really logical, because it's like, okay, you're taking the history of the cash flows and you're almost like projecting this line out into the future. And I was like, that makes a lot of sense instead of kind of like speculating on where something is going. And then, of course, after a while, you realize that, value investing and has gotten, dramatically outpaced by growth and momentum. And the reason is because, they're changing the denominator constantly. And of course, a lot of me realizing that had to do with Preston. But so realizing that, and then kind of saying, what's the solution to this problem, right? Like the unit of measurement is changing all the time. So, how can you fix that problem? And then, of course, you come across Bitcoin, the whole fixed supply thing, halving every 4 years. And so I was like, wow. So, this is, and of course, once again, this has a lot to do with Preston, but, realizing this is the solution to this big problem. And I still think when we get to the other side of, hyper Bitcoinization, I think the value investing will come back to the forefront, because then you'll just be valuing the cash flows, how many Bitcoin, how much Bitcoin is being generated, kicked off by the business. So I think after we get to the other side of this thing, we'll probably have to pull back out a security analysis and go back through that again. But that's how I kind of got into finance originally.
Cool. You mentioned the recycling, and I'd be remiss to not bring this up, but your partner Pomp and Jason are partners in a business called PRTI, Product Recovery Technology. Maybe you should call those guys to learn how to do some recycling.
I had no idea.
Yeah, they recycle. Jason recycles tires for energy, and then mines Bitcoin with the energy that they create. So you didn't know that?
Well, I didn't know that, but I did know that the way Pomp got into Bitcoin and Jason was through mining. I had no idea up until like a couple of weeks ago, and Pomp told me that, and I was like, that's crazy, because Jason, the urgent care he has is like right in my area. So like I've been going to FastMed since I was a little kid. It's weird because I went back after I found that out. I went to FastMed, and there, lo and behold, there's Jason's face on the wall, and I'm like, holy shit! I never realized that.
Well, the story on that one, at least according to what Jason told me, was that Pomp, I guess, went to Bucknell rather. I think he was ROTC, and then he did time in the military. And when he came back, he went to Facebook, then went to Snap. I think something happened at Snap. He came back to North Carolina, and I guess he befriended Mark Cuban, and Mark knows Jason, and he's like, "Yo, why don't you guys sync up?" And that's how they got connected. At least that's the story I think I remember him telling me. They got connected. They did their first fund together. I guess they got on our radar, and Mark Yusko at Morgan Creek was like, "Why don't you guys come under here?" And kind of off to the races, and they did what they did, and they crushed their returns in that fund, absolutely crushed it, and largely because they were able to put Bitcoin on the balance sheet, probably.
Yeah, I actually had I had lunch with Mark. It was like 3 or 4 days ago. I went up to Chapel Hill, and he was telling me how they got into Bitcoin right around like 4K, so that their fund's doing all right.
How the hell did you, as a 19-year-old, become a leading Bitcoin analyst, though? I mean, practically overnight. Like, how did that happen?
Yeah. So originally, I didn't really get into any of this on-chain stuff till, I don't know, maybe March, like late February, early March. But for a while, I was just in it for like the angle Preston takes to it, because I was like almost like religiously, following Preston. And of course, understanding the whole macro backdrop, where interest rates are, how they can only print money from here. That's the only thing they can really do, unless they want everything to go to shit. And so I had put out a piece about, it was called Bitcoin's role in the financial system. And I just published it, and I was like, yeah, why not? Like, I have all these thoughts, and I remember one night I stayed up till like 2 a.m. and like wrote this whole thing, like, because when I have to write stuff, I have to get like all my thoughts out at once, just in one sitting. So wrote this whole thing and put it out in the morning. And then Preston retweeted it, and he was like, this is an article worth reading, or something like that. And I had like 300 followers at the time. And
300
from there,
you have over 100.
I went up to like,
what, 30,000 now or something like that?
Yeah, 100. I think it's 125.
So really, like in 4 months, 3-4 months, you did that.
Yeah, it's really been the last 3-4 months. But it was after he had retweeted that, and then Pierre Richard retweeted it. Started getting some following. And then from there, I remember I was just putting out like, general stuff about the financial system, and like, I was posting all the like M2 charts and interest rates, bond charts, like those kinds of things. Kind of like what obviously Preston's always doing, or like Lynn Alden, she posts a lot of that kind of stuff, and that's really the kind of route I came into it through. But then I remember I was listening to McCormick's podcast, and he does the monthly thing with Willy Woo. And I remember listening to him talk about the markets, and I was like, the way he's describing this stuff is so unique. Like, I've never heard any financial market in my short experience, like following them, be described that way, and how you could analyze all these different cohorts of the investors on the network and all that. I was like, this is fascinating. So I just went on YouTube, and like whenever I try to understand something, the route I kind of take to it is like find the smartest people, and then just like study the hell out of them, and then like the people they follow. And so I looked up Willy Woo on YouTube. I've listened to every single video that he's been in on YouTube, and then like a lot of the people that he follows closely, a lot of like some of the other on-chain guys, listen to everything that they've put out, and that's like really how I got my understanding. I didn't realize until after Glassnode actually has this thing. It's called Glassnode Academy, and it's like basically this like free mini course that you can take to try to understand the stuff. But I mostly understood everything just from the podcasts, and just listening to like hours of these people talking. And it's like I had never had an experience where I enjoyed learning about something. Like first of all, like I'm terrible at math, so like the fact that I'm good with like numbers in this sense is I've kind of surprised myself. Any math is really just like adding and subtracting, but yeah, it's a lot more logic than like actually doing some crazy equation. Because I bombed my last math class. Like, I'm the last guy you want to be asking about math, but it's something about the charts and like the way they kind of describe the market that I just found really fascinating. And so from there I got the free Glassnode subscription. I was stealing charts from other people on Twitter to try to post stuff, because I didn't have access to like the higher level one where there's like all the good stuff in there. And so I would just like put out stuff, and I wasn't really trying to build a following. I was just like, I think this stuff's really cool, so I'm just going to keep like pumping it out there, see if I can get other people who are interested in it too, to talk to them about it. And then from there, it just kind of like took off on its own. I remember the first month that I really started like putting out stuff a lot. I think I got like 5K. Next month went to like 15 and 25 and etc. And now it is where it is. But yeah, it was really just from like, I thought it was interesting and I just wanted to put this stuff out just to like get any thoughts or, like other people that were.
So Preston kind of retweeted you, that got a little bit of traction. You're like, wow, there's a there here. Let me work and dive in deeper, purely out of general interest, but also because there's people finding it interesting. I mean, what's the point of doing something that nobody cares about? So obviously people cared about it. And then the other day you DM me like Willie Woo's now retweeting your shit. It's like, it's crazy, right?
Yeah.
And how did you sync up with Pomp? What was that connection?
So that was also like when I was writing, after I put the article, I kind of left this out. After I first wrote that article for Preston, I started putting out more articles. And I worked with this guy, Alon Schwartzman. He's this guy, he has this like Bitcoin education website in Israel. And he was like the very first person who kind of like recognized me, I guess. And he was like, hey, I really like, your content. Do you want to start writing from our website? And I'll give you X amount per article. And I was like, shit, yeah, why not, right? And because I was going to do this stuff anyway. And so I started working with him, and we started pumping out some more articles. And so I did one more actually with Preston. It was when he kind of like introduced this whole idea of like the whole cash and carry thing and how that's probably drawing a lot of capital into spot. And that's, in my opinion, a big reason why we had the run up of the size that we did. And so he helped me like edit it, and he kind of reworded a lot of the stuff towards the end that was about that part of the paper that was describing his whole like the over collateralization thesis and the whole cash and carry thing. And so from there, I think Pomp noticed that article, and then he DM'd me and he was like, "Hey man, want to come on the show?" And I was like, "I mean, hell yeah, I want to come on the show. Why not?" And then after a while, he just wasn't responding, and I was like, "Oh, this guy's probably going to ghost me." But then, lo and behold, I just like kept bothering him, and then he finally hit me back up, and he was like, "Yeah, let's go ahead and like lock in a date, or else I'll forget." And so we locked in a date for the podcast, and we did it. And so the first podcast I did with Pomp, it was actually had nothing to do with any of the on-chain stuff. It was literally just like talking about the whole macro thing, and it had none of like the on-chain data or like technical analysis, any of that stuff. And so that was like my first kind of meeting with Pomp, and then we didn't really talk for a while. And then after then, that's kind of when at the same time I kind of went down the rabbit hole with all the on-chain stuff. And after a while, Pomp noticed it, and he was like, "Hey, like I'm doing this newsletter. 5 days out of the week, I'm doing like the first 3 or 4 days, I can usually get something good, and then the last day I'm kind of just like bullshitting just to get something to put out, just to say that I put something out 5 days a week." And he was like, here's kind of a win-win thing. If you want to kind of do the Friday newsletter, that would help you get some following and exposure to my audience, while at the same time it saves me time, and then I have a whole morning that I can do some other stuff instead of like just like bullshitting an article together. And so that was kind of where it started.
So you write that he's got a subscriber base, almost 200,000 followers on his stack, right? His Substack. And so you create the Friday content for him, basically.
Yeah, exactly.
Okay, and then you guys talk about it on the podcast about your findings, I guess.
Yeah,
I've watched that several times.
Yeah, exactly. So thanks for watching, by the way. The Friday's a newsletter. Saturday is pretty much just like a reverberation of everything in the newsletter, and then just like kind of like going a little bit more in detail, and I kind of explain things in more layman's term. I feel like when it's not written out, or I guess people also just kind of like audio format, so they can just like listen in their car or whatever. But so we do that as well. And yeah, the whole reason we're doing it through Pomps is we're trying to like funnel it into my Substack. So I have my own Substack in my bio, but we've been putting everything out through Pomp as of right now, because we're just trying to funnel some of his following into
a little crossover,
my account, and then we'll probably end up running ads over it or something. But it's completely free, so I think that's why it's kind of gotten a lot of popularity. I think my thing's up to like 25,000 subs on the newsletter right now, because there's a lot of on-chain newsletters out there, but they all cost, like, I think, in my opinion, they're a little too steep. But
what do they charge? I don't even know. What do they charge for that?
Willie's is $50 a month, and then Bitcoin Magazine has one for $50 a month. So I mean, I don't want to like talk bad about them, but I think $50 a month is a little steep for a lot of people, and like the amount of subscribers that you lose just from going like from $1 to $5, I think is just huge. So
Why not just charge $1? I mean, you're getting like tens of thousands, if not Pump's got like 180,000. It's like, I mean, his is free too, right? His.
Yeah, he is free. Yeah, the whole thing's free. But I think
I don't, like, honestly, I get why people charge. I get it. I also understand why you shouldn't charge on this kind of stuff. And I think it's, in my opinion, like you can give this content out for free and you can monetize it indirectly, right? You don't have to directly monetize. You can build a larger audience and there's different ways to monetize without having to directly charge people for it.
Yeah, exactly, and that's what Pump does. He runs the ads over. There's like a little spiel at the bottom. Nobody probably even looks at, or something in the middle. And so that's what eventually we're gonna do with my Substack.
Let's talk about Bitcoin itself. So what was your? I guess the question to ask you is, I usually ask people the origin story, but you kind of maybe told me that a little bit. So, are you buying Bitcoin? Because I never hear you talking about buying it. Like, because you don't have a lot of money, but I guess because you're a college kid. But like, are your parents like lending you money to buy Bitcoin? You know what I'm saying? Like, have you orange pilled your parents, by the way?
A little bit. My dad's got a little position, but it's kind of like he's like, if this thing goes, he hasn't, like, it's such a small position that he's like, if this goes to zero, like, I don't give a shit, but I'll be good if it does what my son's saying it's gonna do. So I think that's like where he's at. Or he's not like completely orange pilled, but he's not like he doesn't think it's a scam or anything like that. He's kind of like on the fence about it, but he just knows that like it's something I'm really into. So
is he surprised by the amount of influence that you've created? Your parents must be really proud of you, by the way. But just the fact that you've gotten to where you did so quickly, and the people, I mean, he probably doesn't know who any of these people are, but there's the people that you're rolling with. I mean, it's crazy for a 19-year-old guy in college to have kind of come on the scene that quickly, as fast as you have. I've really not seen many people come on to the scene as an influencer as fast as you have, because you're actually providing real value to people. So I would imagine your parents must take note of that. Like, look at all these individuals that my son is interacting with, and they're pretty sophisticated, smart people that have a lot of money, and they believe in this too.
Yeah, I think they don't really know, like you said, a lot of the people that when I'll say, oh, so-and-so reached out to me like this was so sick. I remember one of the coolest followers I got was Willie Woo, and I was like, Mom, Dad, Willie Woo followed me, and they're like, who the hell is Willie Woo? And I was like, oh, they don't know how cool this is for me. But they've been kind of taken back by how the following's grown, just as I have, and they kind of like make jokes about it and stuff. But it's crazy, man. But yeah, they really only recognize the people like when Scaramucci followed me, and he kind of reached out to me. I was like, hey, look, I got a DM from Anthony Scaramucci, and they're like, no way. And then they're like, okay, well, we know him. Or like John Lennon's son followed me, and that was one that they were really excited about. Which, like, I mean, he's probably a cool guy, but like in terms of like all the Bitcoin, it's like that's been like the one of the not so as cool as they've been with the followers that I've gotten. I just worded that really bad, but you know what I mean. So yeah, they only know a lot of like the boomer people that kind of follow me that are kind of from their generation. But in general, like they're super supportive. They don't know really what I'm talking about on any of the podcasts. They just kind of like to watch to see that like I'm on YouTube, but like they don't know what I'm saying. But yeah, they've been super supportive regardless, even though they don't really even understand what I do. Like when I ask them like, do you guys know what I do? And they're like, no, not really. Like they just know I do like market analytics stuff, but that's about it.
Let me just go through a couple of these questions here. So the corporate treasuries, right? Bitcoin being on the corporate treasury, I should say. This was a narrative that was really pumping, really pumping in the earlier part of the year, where everybody was trying to front run institutional money coming in. People like Scaramucci, who's raising his fund, were on television on CNBC and Bloomberg, et cetera, and saying there's institutional money coming in. There's a wall of institutional money coming in, as he would say, right? And you want to get in before they get here. Then Elon did what he did, and then the price dropped. Do you think in this particular, we talk about this a bunch, we DM all the time, and you come on Clubhouse and we chat too, but we talk about this all the time, and it's like, because you have the on-chain analytics, right? And you're seeing that the addresses of certain aged addresses with the amount of Bitcoins, right, are not moving per se, right? And that's giving people comfort, right? Hodl always says that when you start to see, I think what they call it, the wave.
When the coins are starting to move?
Yeah, the coins from old addresses, when they start moving, I think it's called wave something. I slipped my mind. But anyway, that is an indicator that you could be toppy in the cycle, right? That really hasn't started to happen yet, right? According to what you've seen.
Yeah, so I think like a lot of the coins that have been sold, especially since February, like the age of the coins being sold has been trending down. So yeah, it's been like very new market participants. Like when you look at the tops, it's usually that's when you start to see a lot of the older money, like the Bitcoin OGs that are stepping in, and they know that we're in this like euphoric, speculative mania kind of thing. We're nearing a blow off top, but we saw that right after all time highs, but since then not really much. Actually, quite the opposite. That long term holders have actually been stacking. The hardest they've been the whole bull run. So they kind of sold off up until kind of like the heavily right after all-time highs, but then they kind of sold off slowly into like the mid 50s. But then after we kind of stalled out, we kind of started having that rounding top. After we started getting to like the top started trending back down, that's when you started to see them buying up, which was very interesting. And so like for a while, like when we first started correcting, the selling from the short-term holders was outpacing that of the long-term holders. But now we're starting to see the long-term holders offsetting the selling from the short-term. So you're seeing now either A, like the short-term holders are done selling, or like B, they've pretty much, they're almost done capitulating, and a lot of them have puked out the coins that they're going to puke out. And you're seeing long-term holders are buying harder than ever. They bought almost 750,000 coins in the last month and a half or so. So it's been pretty wild to see that kind of dynamic play out, which in my opinion is kind of showing that we're in this like mid cycle consolidation, because you also have seen this dynamic in the middle of the two previous cycles, where like in 2013 you had the two big double bubbles, and then in between you had this like big consolidation, and it was the same thing in that. It was kind of like the longer term holders, granted the asset was only 2 years old at that point, but the longer term holders had come in and kind of set the floor, while all the new speculators had moved out. And then once that process was kind of finished, then we moved back up. Same thing in late 2016, you saw this same dynamic. I kind of think of it as like if someone spilled water on the counter, right? Like you need a bunch of paper towels. And so like until the mess is cleaned up, like it's just going to take time for those coins to move into, the hands of people who aren't going to sell. But that process is well underway, and I think is kind of in the latter half of that kind of like reaccumulation.
Do you think that narrative that everybody was a frenzy coming in, like we better get in now, FOMO, institutional money's going to come in, Mass Mutual, the Scaramucci's of the world, like they're all going to come in, and we better get in now before they do, and then that died off? Do you think that played? But you mentioned the cash and carry arbitrage. Maybe we want to talk to that too. Like, what do you think? Do you think that was the capitulation for it to trend down at that moment, and that's why? What was your reasoning? That was why it's trended down.
Yeah, I think one of the big things that we've seen is the drop down in whales, which hasn't seen any recovery. It's still trending down since kind of late February, mid-March. Sure. And so a whale is, according to Glassnode's data, like different data providers might define it differently, but it's an entity. So it's like a group of addresses that looks like one not necessarily a person, but one entity. So like it could be a person or a corporate balance sheet or a fund or something like that. The behavior of those addresses look like one entity. And so, seeing entities with over 1,000 Bitcoins, that's been trending down. So I think that like just on chain in that sense has shown there's a lack of those big entities coming in, which by the way, like had been going like parabolic, throughout the beginning of the bull run, especially after we broke all-time highs. So it seems like a lot of maybe like high net worth individuals or funds had kind of like ridden the momentum wave up, and maybe they saw, okay, this asset just broke all-time highs, it's going a lot higher, and they jumped in then. But now you're starting to see not only is like the general age, the average age of the coins trending down, but you can actually see the specific like selling of different cohorts. And so there's been a lot of selling from like 3 to 6 month old cohorts. So that lines right up with, getting in right after all-time highs kind of in January, or also around when Tesla bought in late January. That, I think there's a lot of funds that had kind of gotten in, kind of ridden the wave then. And that's where a lot of the selling has come from. Because it's not retail. Like a lot of people have been saying, oh yeah, retail, like stupid retail freaked out and sold out, but it's not retail. You've seen retail has actually been buying more than ever, like in Bitcoin's history. Like you just look at like the slope of the line. I mean, it's pretty much like going straight up the last month and a half.
How do you know there? Let me ask you this. The only thing I don't understand is because I just pulled it up. I pulled it up when you were talking. So I saw on Glassnode Insights, it shows the various different Bitcoin supply distribution across different categories, and they call them shrimp, crab, octopus, fish, dolphin, shark, whale, humpback. Then there's exchanges. Then there's miners. But it's showing the number of coins that the address owns. You're calling a whale institutional. Is it because they own so many coins that we assume that it is that? Is that the thinking or?
Yeah, for sure. But more so like looking at the rate of new whales that have come about, like that had been going way up at the beginning of the year. So like the number, it looks like a bunch of new whales came in, and now a lot of those new whales are moving out. And also we're seeing this huge increase right now of supply kind of moving to like illiquid entities. But at the same time, you're not seeing a big uptick in whales. And like I had mentioned also, like the longer term holders have added almost 750,000 Bitcoins in the last month and a half. So to me, that's showing that it's not new whales coming in buying the dip, but like, maybe crypto hedge funds, or I mean, it doesn't have to be crypto hedge fund, but any kind of larger entity that had already been in Bitcoin. Or maybe been through multiple of these cycles that are coming in, stepping in, saying, okay, Bitcoin is really cheap right now. We're going to go ahead and buy. But it doesn't look like I thought maybe when we got into the low 30s, or when we went below 30, you'd see this big uptick in new whales kind of step in and scoop up the dip, maybe like being some kind of fund that had missed out on, they didn't want to buy the top, and so they were waiting for a big correction. But I still haven't seen that, which is kind of surprising. But at the same time, it's good for adoption, right? Like, you've seen this big increase of holdings from retail, and then also like the amount of new entities coming on the network has pretty much had this big W-shaped recovery after we had that big drawdown, which a lot of it's probably coming from Latin America, but in general it looks like a lot of smaller entities, because you're seeing an uptick in new users but no uptick in whales. So I mean, logic is telling you, okay, it's smaller entities, because you're also seeing them buy a lot. So that's kind of like my train of thought there. Okay. Which, yeah, I mean, I guess it's good for adoption, right? But not very good for price in the short term.
I had Preston on the show. Well, actually, one of the most popular shows I've ever had, actually, in terms of views. Not surprisingly, guy's a stud. We talk about Dalio because he's obviously a value investor, and that's where he started out. It's kind of like where you started out. And he talks. I brought up the Dalio all-weather portfolio to him. In the all-weather portfolio, he says you should have 30% allocated to equities, 55% to bonds, 40% of that. 40% would be, I guess, 20-year long-term bonds, and then the 3 to 7-year short-term bonds, which is the other 15% out of the 55. So that's 30, 55, 85. An extra 15% commodities, and he says that should be gold, 7.5%, and the remaining 7.5% is broad-based, right? He's been touting this for several years now to people, and I just had an interview with Sean Culkin, the interview I did before your interview. If you know who Sean is, he's the guy in the NFL who took 100% salary Bitcoin, right? And he was also a Dalio fan. I think a lot of people are. But I was like, when they're telling you their playbook, they're running a new playbook, right? Like, he's not running that playbook, I don't think, anymore. Otherwise, why would he be telling us? And frankly, why didn't he tell us 2 decades ago when he started running the playbook? Because he doesn't want competition on the playbook, right? Because then it changes into a new playbook when everybody's doing the same thing. So what is he doing now? Right? What do you think they're doing now? He recently mentioned that people should be converting, I think, 20% of their gold into Bitcoin, and that he believes that Bitcoin is something that, he's kind of leaning towards Bitcoin as a potential asset that people should own. He said he owns it, right? So what do you think of Ray Dalio? Not historically speaking, but moving forward, and the fact that he's kind of shifting that narrative. In fact, one more thing I'll leave you with before you tell me about your feelings about Ray Dalio is that when he was saying for the last few years that you should be in bonds, I kept saying, how irresponsible is this with interest rates as low as they are? If you're in an asset that's that low and the interest rates eventually creep up over the next 5 or 10 years, the underlying asset value has to go down. But more recently, he actually said in an interview, and the first time I ever heard him say this was a couple months ago, he's like, well, I really think that people should be buying TIPS. Treasury Inflation Protected Security, I think it's called.
There you go.
If I'm getting it correctly. Basically, inflation-adjusted bonds, right? Because there is a risk, I know it's low, but that rates would go up. And where do they go from zero? You could say a negative, but I mean, they can't be there forever, right? So if you're buying a 30-year treasury, is that a good idea? Probably not these days. So what do you think of Dalio and him telling us the old playbook? And like, what do you think he's doing now?
Yeah, I think one thing about Ray is, so I've read Big Debt Crisis. I've also read Principles by Ray Dalio. And one of the big takeaways from Principles is when he always talks about the radical, open-mindedness, radical transparency, that thing. I think he's one of the most open-minded people, and I think that's been something that's allowed him to be so successful. So, he's not like Nouriel Rubini or Peter Schiff that are saying something and then they can't change their opinion at all. I think he's somebody where he'll sit down and listen to you if you disagree with him, and he'll genuinely like soak in the points of what they're saying, which is something like after I read Principles, this is like a side tangent, but I've really incorporated that into my life about like, if someone says something hateful on Twitter or whatever, like pulling the piece of information out of like the angry or like, them cussing you out or something, like pulling the piece of information that you can actually take away to change your thinking. But anyway, yeah, I think he's somebody, and that's why he's probably gravitated towards Bitcoin, that he'll listen to all the options on the table. And so people like that are, I think are the early adopters of Bitcoin in themselves, like all these people that have realized there's something wrong with the current system and then, have been open-minded to anything that could be the solution. But I think Ray, after he made that, the whole I'd rather own Bitcoin than bonds, that statement, I mean, he has to have a position at this point. But, I mean, who knows?
Well, I think he said he did.
Oh, he did?
I think he
Okay.
admitted to having a small position.
Was it
I
personally
mean,
or in Bridgewater?
That's a good question. That I don't recall. I thought he said that they had a position, and maybe it's they instead of him. I don't know, but we could Google that very quickly and just spell it right away. So everybody could go do that. Let me just do it real fast. Does right? Yeah, it says he has some. He did. I have some Bitcoin. He said, but he didn't reveal how much.
Makes sense. Yeah, I think Ray probably realizes that Bitcoin is going after gold, obviously, and I think a lot of Bitcoiners just see that as a given. But also, where Bitcoin I think is really going after is the bond market. When you start to have, like Preston talks about this, the whole true free and open market rate that you're using to make asset valuations. When that changes to something on derived from Bitcoin, everything is going to just explode. And so I think Ray has to realize that, seeing everything going on and then the whole borrowing lending market with Bitcoin and where that's kind of evolving. I think Ray has to realize that, and maybe that's part of his frame of thinking about why he would rather own Bitcoin than a bond. But I don't think like nobody my age is talking about bonds. First of all, there's a lot of kids my age that are all like day trading on Robinhood, of course, because we're in this like crazy situation with printing, and I think that's been a big driver of why we've seen all these like big speculative bubbles. But nobody my age is talking about bonds. Like nobody cares. I think that's such a boomer instrument, and like eventually we'll probably evolve away from that, and I see Bitcoin becoming a much larger percentage of investment portfolios over the next 10 whatever years. Of course, like I'm all in, but when I even talk to anybody who's a little bit older and they're asking me about Bitcoin, I think the best way to kind of approach it is like, okay, like take 1% of the holdings in your bond portfolio and put that into Bitcoin, or like just take 1% of your net worth in general and put it into Bitcoin. And that way, if it goes, and this is this is what my dad did. He took, he reduced some of his bond position and put it into Bitcoin, very small amount. And if it goes to zero, then who cares? But if what happens, that, what we think is, going to occur with Bitcoin, then the bonds are going to be worthless and Bitcoin will have made up for all those losses.
Yeah. It'll probably be worth 99% of his portfolio if it does what we think, I was going to ask you what you think of Plan B stock to flow analysis for predicting Bitcoin prices into the future, as it's been pretty accurate. Obviously, it broke recently, but what do you think of it?
Yeah, I think it's a good meme. Like I think memes play a very important role in kind of the narrative of something, and the whole idea of Bitcoin trending upwards because of scarcity. I think like having a visual for that and like a way to kind of like visually interpret that, I think is important. And obviously the model has historically done really well, even though we are, like you said, at that lower been. We're kind of like that make it break it point for the model. But I think it's a good way for new people coming in to kind of like help them visualize what's going on and like understand how the scarcity affects the price, especially for like people my age, which we have like a very low attention span because we're on TikTok all day long. So you need to really like give them a quick visual and be like, hey, look, this is it. Like, look at the little different colored dots, and like, this is showing how Bitcoin trends up against scarcity. And they're like, okay, that makes sense. Rather than like explain, if I start talking to somebody my age about like, having difficulty adjustment, like I'm going to lose them. People just like don't want to hear all that. So like, I think having a good like visual that describes that, I think is great. But in terms of like using it as kind of like a trading thing, or kind of like a I guess, yeah, as like a trading tool, I don't see it as really anything useful for that. Although I did create this kind of signal that was based off of the stock to flow deflection. So like how far off stock to flow was from price, and then like translating that into an RSI. And I've created like this model that I put out like 2 days ago, but I have to back test it more, but over the last year, it's been like 83% accurate and calling like buys and sells through that. So I guess it depends, like as far as using the specific model, like what the stock to flow price is. I don't think people should be trading off of that, but I think you can kind of like use it to maybe draw some signals like indirectly from it. But Plan B is obviously a really smart guy, and I'm sure like if the stock flow model fails, he'll probably come out with something else.
I mean, it's a guide. It's not perfect science, right? And it's like these little tiny dots moving in whatever this way, going up. It's a range, and people say, "Oh, it broke." It's like, I mean, technically, I guess, but it just means at the bottom end, and it can come back up again. And by the way, to your point, what do you think the price will be by December? Do you think we'll have like a 2017 run up at the end of the year?
My base case would be, and like obviously I'm an optimist, but I think the institutional money is probably coming in the latter half of the year. And so if that's the case, then yeah, maybe we have like the second, like 2013, we had the first big pump, we consolidate for a while, and then we have another big run up. So yeah, I guess that would be kind of my base case, but unless we have more, institutional capital coming in, I don't think we see another big price run up.
What's your 10-year price prediction for Bitcoin?
I think in 10 years, you won't be measuring it in dollars. So I guess at that
you think
point,
we go hyper Bitcoinization within 10 years?
Yeah, I think next cycle. That's like my guess would be we get entrenched enough that it gets a lot of attention, and you have a couple big major corporate announcements, but then we cool off again, and then I think what'll probably happen is like we'll have another drawdown, and then there'll be a bunch of narratives like really pressed on Bitcoin once we're going to a bear market, the whole energy thing, and like Bitcoin's used for criminals, all that stuff, and then a lot of people will miss out on that second run up. But yeah, I think if it gets as entrenched as like it kind of, I think it will in my mind, and then we cool off again. If we start to have that second run up, especially if we broke that previous all time high, I mean, I don't see how you wouldn't get to like 10-20% of the money supply at that point. I mean, when you're talking about like a multi-million-dollar Bitcoin, you're talking about like 15-20% plus of the money supply would be in Bitcoin. So I think at that point it'd just be way too big to fail. But yeah, I don't think it'll be this cycle. A lot of people are talking about everything with $1, but I think that can take longer to play out than maybe you'd think. But what do I know? Maybe it'll happen this cycle, but my base case is next one.
Will, thank you for coming on the show. I appreciate you spending time with me today. Out of your busy college life.
Man, I woke up like an hour and a half ago.
Well, I hope you're okay, because you just recently got in a car accident. That's unbelievable. Sorry to hear that, but it looks like you're doing all right. But again, dude, totally appreciate you coming on. Appreciate the relationship that we're developing, and I'm really happy for everything that you've done so far, and just wanted to thank you for coming on.
Thanks a lot, Jay. I appreciate you, going back and forth with me whenever I shoot you a message, and having me on. I like this podcast a lot because I told you this. A lot of the ones I usually come on, it's just like strictly data stuff. I have to like put on my straight face and like, just be all like professional and shit. So this was good. It's just kind of laid back conversation. I really liked it.